The reverse mortgage eliminated my monthly payments, so I'm safe. It's a dangerously simple assumption, and it's sold to thousands of seniors every single year. It's a powerful thought, isn't it? It just speaks to that deep desire we all have for security, for peace of mind, especially in retirement. And, on the surface, it makes total sense. If you don't have a big mortgage bill coming in the mail every month, what's there to worry about? The thing is, while that feeling of safety is completely understandable, it's often built on a huge misunderstanding that can have, devastating consequences. It's dangerous because believing you're completely safe can lead you down a road you never, ever wanted to be on, one that could end with losing the very home you were trying to protect. So let's pull back the curtain, we're gonna walk through this together, and unravel the hidden truths about reverse mortgages so you can see the whole picture. Here's how we're gonna break this all down. We'll start with that no payment illusion. Then we'll talk about why this is so important right now. After that, we get to the real heart of it, how the fine print itself becomes your payment. From there, we'll shift into solutions, 4 practical steps for safety, how to think about this whole process with confidence, and finally, how to make sure your home is truly your control. It's all about moving from feeling uncertain to feeling empowered. Okay, so first things first, let's tackle that big promise, the one that's so tempting, the illusion that a reverse mortgage makes your payment obligations just vanish. This is the cornerstone of the sales pitch, but it hides what your real agreement with the lender is. So here's the reality, and it's really important to get this from the start. A reverse mortgage doesn't make your debt disappear. Actually, your loan balance gets bigger every single month as interest and fees pile on. And even more important, it does not guarantee you can stay in your home for life, no strings attached. Your home is only secure as long as you follow a very specific set of rules that are often buried in that fine print. If you break even one of them, it can lead to the exact same outcome as missing a traditional mortgage payment: foreclosure. So you might be asking, why is this such a big deal right now? Why is this so urgent? Well, the reason is rooted in the economic reality that millions of retirees are facing today. There's this growing trend of seniors who are equity rich but cash poor. Maybe that sounds familiar. You've spent a lifetime paying down your home, building up all this incredible value in that one asset. But at the same time, a fixed income from a pension or Social Security just doesn't stretch as far as it used to, with the cost of healthcare, groceries, everything going up. And in that situation, the idea of tapping into your home's equity without a monthly payment can feel like a lifeline. And that's exactly what makes the reverse mortgage so appealing and potentially so dangerous. And what this shows us is that the stakes are just incredibly high. We're not just talking about money or property here. This is about your independence, the ability to age in place with dignity. It's about the legacy, the wealth you hope to pass on to your kids, which can get eaten up by that growing loan balance. It also makes planning for the end of life really complicated, especially if a health crisis comes up. And sadly, the complexity of it all can make seniors a target for fraud, all while adding the extra job of managing taxes and insurance, things that are easy to forget or might become hard to afford later on. Okay, this next part is, without a doubt, the most important thing we're going to talk about. It's this idea: the fine print is your payment. That's not just a clever phrase, it's the literal truth. You're swapping a monthly check for principal and interest for 4 critical, ongoing responsibilities you absolutely cannot break. Now, before we get to the 4 rules, you have to understand this legal term: due and payable. Think of it as the tripwire in the contract. It's a clause that says if you violate certain conditions, the lender can demand the entire loan balance, every cent you borrowed, plus all the interest, be paid back immediately. If you can't, they can start the foreclosure process. This is the trigger that can cause you to lose your home, even though you never technically missed a payment. All right, rule number 1. The first unbreakable rule is you have to pay your property taxes. On time, every time. This is the single most common tripwire that leads to foreclosure. Why? Because the government's claim on your property always comes before the lender's. So if you fall behind on taxes, the lender gets nervous that their investment, your home, is at risk. To protect themselves, they'll say you're in technical default, and that gives them the right to call the entire loan due. Rule number 2 goes hand in hand with the first. You must keep your homeowner's insurance active at all times. Your house is the lender's collateral. It's the only thing securing their loan. So if something happened, like a fire or a storm, and the house wasn't insured, the value of that collateral could be wiped out. So letting your policy lapse, even for a little while, is a huge violation of the agreement and another major trigger for that due and payable clause. Third, you have to maintain the home. Now this one can feel a little fuzzier. but it basically just means you have to keep the property in decent shape. The lender needs to know the home isn't falling apart, which would cause its value to drop. We're not talking about a little peeling paint, we're talking about major stuff, like a leaky roof causing water damage or a crumbling foundation. If big problems like that are ignored, it could be seen as a breach of the contract. And finally, number 4, which I think of as the residency trap. You must live in the home as your primary residence. But here's the tricky part. If you are out of the house for more than 12 months in a row, say for a long hospital stay, a move into a nursing home, or even just staying with family for a year, the lender can declare the home is no longer your primary residence. This can trigger the loan, making it all due and payable. And that can create an absolutely heartbreaking situation, especially if a spouse who isn't on the loan is still living there. Look, I know hearing all these risks can be unsettling, but knowledge is what gives you power. So now, let's pivot from the problems to the solutions. Let's lay out a clear 4-step playbook you can use to protect your home and take back control of this whole process. These are 4 simple, proactive steps. First, make the mandatory HUD counseling a family affair. This isn't a box to check, it's there for your protection. Don't go by yourself. Bring a trusted family member or an advisor to be a second set of ears. Second, you have to budget for taxes and insurance. If there's any doubt you can afford them down the road, insist that the lender create what's called a set-aside, basically an account funded by your loan that pays those bills automatically. Third, talk openly with your family about those what-if health scenarios and that 12-month residency rule. And fourth, learn to spot and immediately shut down any high-pressure sales tactics. And this is a great way to tell the difference between someone who's trying to help you and someone who's just trying to make a sale. A red flag is anyone pushing you to hurry up, who brushes over your responsibilities, or who tries to sell you on using the money for some other investment. A green flag, that's a loan officer who encourages you to bring family, who stresses how important that objective counseling is, and who insists on creating a clear, sustainable budget for your future. Knowing the difference is your best defense. I want us to take a breath here for a second and reframe how we're thinking about all this. All this research, asking all these tough questions, it can feel like a lot. But it's so important to see this not as a sign of fear, but as an act of empowerment. Please, really let this sink in. Your need to understand every last detail of a reverse mortgage is a sign of financial maturity. It is not a weakness. A smart, responsible person asks the hard questions. A wise person plans for what might happen. The real risk here isn't in the product itself, it's in failing to plan for those due and payable conditions. Your caution is your greatest strength. Because that's what this is all about, right? Staying in the driver's seat. By carefully planning for your taxes and insurance, by having those honest talks about health and where you'll be living, you're not just avoiding a disaster, you are actively keeping control over your home, your money, and your future. You're getting rid of the main risk of a technical default and making sure that you, not the lender, are the one calling the shots. All right, let's bring this all home now. We've gone from that simple but misleading idea of no payments to a much deeper, clearer understanding. And this whole lesson really boils down to one powerful principle for protecting your home. If there's one thing you remember from all of this, let it be this. A reverse mortgage is often called a loan of last resort. For that very reason, it has to be treated with first-rate vigilance. You can never, ever let the promise of no monthly payment make you forget your 4 real payments: taxes, insurance, maintenance, and residency. So as we close, let's just reflect on what we've covered. A reverse mortgage, we've learned, isn't a magic wand. It's a deferred, growing debt with 4 major risks that, if you don't plan for them, can lead to losing your home. But the most helpful thing we've learned is that the key to staying in control, the key to preventing that technical default, is all about planning ahead for the cost of taxes and insurance. So I'll leave you with this gentle challenge. What is your 10-year plan for those costs? Having that conversation with yourself and your family is the most powerful step you can take. Because at the end of the day, you have the power to secure your home's future through informed planning. You can make sure it stays your sanctuary on your terms.